Hi, hi, and welcome to another daily recap. So today I'm gonna recap December 10, 2024, and it's day 155. So as usual, let's start with the euro dollar from the daily perspective. So the swing structure is bearish and internal is also bearish, and price adds up the buy side liquidity above the strong internal high, which means that there is a lot of possibility of the price coming down, take out some serious and liquidities. So let's see a big zoomed in version. But this is where you can see that the price had swept the buy side liquidity, but there is a caveat that the demand is still holding. So if the demand, if the demand steps into the play and pushes, and it can push the market up, and this, you know, um, bullish order flow can continue. Otherwise, if the supply is strong, and it can also take out the daily target, which is the sell and liquidity below this demand zone. But the only thing that I'm considering, the thing that I'm considering why this demand could hold is because it has formed a sweep of liquidity, which is a major factor for the demand to be an institutional order block. So that's why my daily bias is neutral because it's having a buy side liquidity sweep and it's having a weak low because this low failed to take out this high, or you can also take this high. This low failed to take out this high, which means this low becomes weak and this high becomes strong. But from the bullish perspective, if you consider, you can see that the high probability demand is still holding. So there is, a bit of bias or confused bias in the daily. So that's why we are having 4 hour and as well as the H1 time frame to give us a proper directional bias. So jumping into the 4 hour chart, we can still see that this is still a weak in the 4 hour too, and it has weak the strong swing high and price had shock bearish, which means the supply is in control now and the price also is the supply, which means I can look for shorts from the H1 time frame if there is a bearish sweep zone form, or otherwise if there is an supply form already, I can also take shorts from that supply. So let's zoom in and see some intricacies of the 4 hour chart. So buys are highly valid today. Why? Because if you see it from the zoomed out version, you can see that the price had chalk bearish. But if you zoom in, if you see that the price had already chalk bullish, and this demand has held, price had mitigated into this demand and pushed the price up, and price had already chalk bullish, and this demand is now holding. So there is a possibility of the price pushing further up to take out this, liquidity pull above. So that's why the 4 hour bias is also neutral. Why? Because there is a sell side liquidity below, and the demand is holding internal and fractal order flow is bullish. So it's a mixed bias in both 4 hour as well as the daily chart. So why this is a strong liquidity pool? Uh, Uh, Probably, yeah. Actually, price is in the daily demand zone. So within the daily demand, price needs to seek some sell liquidity to push up because price has swept a strong buy sell liquidity. So we need to see strong sell liquidity being swept before pushing up. Before pushing up, if the price pushes up without taking any strong sell liquidity, then we can assume that it is a trap to trap the early buyers. So that's why I see this as a strong sense and liquidity, and and the sell liquidity. Now the sell liquidity could also be this because it had chopped bullish, and people like me who trade market structure see that the price had already chopped bullish. So I can look this as the demand and place longs, but this could be an early trap, early buyer's trap, and a lot of sell liquidity could be accumulated here, and price can push down, take all the sell liquidity, and then it can show its real move up. So a lot of things to consider before taking any trades, but still, your strategy is the one that you should be sticking with. So as per the same thing that I wrote here, we can just refer it, pause the video, and refer that same. this is H1. I know the H1 swing structure is very large. I need to modify it in the coming days. Definitely, I'll modify that one. But for currently, this is the H1 swing was, and this is the H1 swing high, which is currently being liquidated. And current since the weak internal order flow is currently bullish, then I'm looking for the price to continue the bullish order flow to take out this weak internal, this high. So if you see from here, you can see that the price had, made a strong push up, and it made a push down. Now you can say that this can be the push up and take out this, uh, high. So from multiple angles, we can say that price can go up and take out that high. From the 4 hour, you can say that the price had chalk bullish, so I can look for longs. And from the H1 perspective, from the swing structure perspective, you can say that the price can go up. So this is not in in markings, but I can see visibly, the price adds strong sense and liquidity, and it has pushed up, which means the demand is still in control. And since the price had reached almost 50% of this range, I can assume that the price can push further up to take out this high. Otherwise, there is also some unmitigated demand right here, which the price can push down and take out all these sell liquidities and tap into this unmitigated demand, and then it can start to push up. So anything can happen. The only thing that protects us is the session directional bias. So here you can see that the price had already, made a bullish IBOS tapping into this demand zone. As I already told you from the 4 hour chart, this could be an early buyer's trap. So the key here is wait for some sell liquidity sweep, and then look for longs targeting the weak internal low. Otherwise, if since there is nothing to the left from which the price can react upon apart from this supply. So if you get sufficient bullish order flow, or bullish momentum kicking in, then you can mark this as your demand and look for entry confirmations targeting the weak internal high. So seeing the larger picture, I can remodify the swing structure. So that's everything I've written here. So you can just refer pausing the video. So yeah, price took some buy side liquidity, mitigated into the supply, and it had chalk bearish. So now it's time for me to take shorts. Why? Because price had swept the buy side liquidity, and I can expect the price to take some major sell side liquidity below. So that's where the high time frame narrative is coming from. And from the low time frame and from the session direction, we can infer that the price had swept the buy side liquidity and it had chalk bearish, and major liquidity pool can be resting below this strong internal low. So that's why I'm looking for shorts. So phase C condition, so this is actually the phase C. So prices NOT and higher time frame, it is supporting the medium time frame idea and medium time frame POI as part of a criteria met, and these are the criteria that are being met by the POI, and it is in line with the medium time frame order flow. So 4 out of 4 boxes are being ticked. So what are the other confluences? KSNI is being swept and supply chain is being respected, and there is no opposing demand zones right here. Though the price is still in the 4 hour demand zone, so within the 4 hour demand zone, there is no H1 demand zone which can hold the price and push the price up. So there is no opposing demand zone, and there is a timeless liquidity to target, that is the previous base blocks right here, and it has also got a structural liquidity that is a strong internal loss. So what are the risk factors? This is a counter internal trade, or maybe not. I could also consider this as one internal structure, and this could be the weak internal low. So there is a lot of chance. This is not the exact market structure mapping. There can be different types of market structure mapping. So, and what is the 4 hour demand may hold? Yeah, actually this counter internal may not be, is actually a positive confluence, and the counter internal is a risk factor. So You get this is a partial risk factor and this is a full risk factor. You can say like that. So coming to M15, the only lid is available right here. So all I can do is wait for the price to take out this lid, or wait for the price to mitigate into this H1 POI and then chop bearish. So from this freshly formed POI, I can wait for the price to mitigate, and using this mitigation candle, I can look for shorts. So ideally, I would like the LC1 to play out, but in this case, nothing played out. But price took the sell side liquidity below, and just one push down, it did not make any pullback. But still, there were a lot of sell side liquidity, and there is also this demand waiting for the price to mitigate. So I can still look for shorts targeting all these liquidity pools. So after this price made another small pullback. So I assumed this to be my lid and waited for the price to take out that lid, and it was almost the New York just started. So I waited for the New York to pull back to take out that lid so that I can look for shorts. But what really happened was that okay. Yeah, actually, price in H1 itself, price made a bearish push down, which means I can assume this as my POI and look for shorts from this POI itself. But it's very risky. Why? Because this POI is not yet mitigated, and this POI is within the reachable distance. So this POI can be an inducement for tapping into this POI, which makes this POI very much high probability. So coming to the end of the day, this is almost just 8 minutes to go. Coming to the end of the day, price engineered the buy side liquidity. Probably during the New York lull period, post London close, price can take out all the buy side liquidities, tap into this H1 POI, and then it can show its real move. But during the session, I didn't get any trades, so I was unlucky today. And yeah, this is all about today. So I can expect probably, if the price consolidates tomorrow, I can expect the price to take out all these buy sell liquidities, tap into this H1 POI, and probably chop bearish for me to take shorts. And eventually, price can mitigate into this H1 demand zone, extreme demand zone. So this is all about GU. So let's start analyzing GU. So in GU, same, the swing structure is bullish, internal is bearish. This is a weak internal low, this is a strong internal high. And now currently the price is in the swing internal pullback phase, and price had mitigated strong buy side liquidity. So let's zoom in to see some more intricacies of the path. So here you can see the price had mitigated the buy side liquidity, but still the demand is still holding. So I can expect the price to mitigate this demand and push the price up and continue to be bullish till the price mitigates the demand in the supply order flow in the daily. So that's why the daily bias is still neutral. So I would have written, buy side liquidity change, deeper, okay, bias, bearish. Monday manipulation, it's kind of bearish, but you should also consider the demand still holding. So probably I thought, okay, this demand is still unmitigated, so probably price get pushed further down to mitigate into this demand. So probably that could be the reason why I took bearish bias today. But anyway, it's not necessary that the price must mitigate this demand, because price already swept the sell side liquidity below and took all the imbalances here. So this demand could hold, and it can push the price up, and eventually price can mitigate into this daily supply order flow. Zooming in into the 4-hour chart, again you can see the price had mitigated into the daily demand zone, and there is strong loss which has been holding the price and pushing the price up. Now the price had mitigated into the 4-hour supply, and it gave a very strong reaction. So this is not a very high probability supply, but still it gave a strong reaction just to trap the early sellers, and all the buy sell liquidity would be accumulated right there. Now price can push up to take on all the buy sell liquidity to trap all the early buyers, but early sellers. So this is a weak internal high, which is also a ton of buy sell liquidity accumulating with a stop losses of the early sellers. So this is the chop bullish, and this is the PY that I can look for shorts. So look for longs. So very much high probability condition. So coming to H1, the swing structure is bullish. Internal is also bullish. So all I can do is price has mitigated the 4 hour demand. So all I must do is wait for the price to chop bullish, and with the freshly formed POI, I can look for longs targeting the buy sell liquidity above. Okay. Valid supply where the price can mitigate and push the price down to take out the 4 hour sell liquidity formed due to fake break liquidation. So did I make any mistake here? Did I say early buyers or early sellers? So I think that is early. Uh, price made a strong push up, maybe just to trap the early buyers, and it can push down. So that's why I marked the sell side liquidity. So I'm okay. That's early sellers. Yeah. So there is a ton of sell side liquidity below, which the early sellers, early buyers. So price can push down to take out the sell side liquidity below that. So yeah, at the start of the session, price took out the Jason eyes. Now I want, which means the immediate buy sell liquidity has been taken out. Now all I want to see is the price to take out the sells price to make a bearish chalk confirming the session direction. And once the bearish chalk is confirmed, I can look for shorts using this POI. And yeah, price made a bearish chalk, and this is the POI that I'm looking to trade with. The only thing that bothers me is that there is no leg inducement right here, so which means the liquidity could be resting right above here. So that's why we got M15. Price may take some low time frame liquidity and push the price down. So this is actually phase C, and high time frame, all the 4 out of 4 criteria has been met, and the POI is also high probability POI. And what are the other confluences? It has stabilized, and the supply chain is getting respected, and there is no opposing demand zones right here. And there is also time-based liquidity target. That is, the first target would be my Asian lows, and second target would be the previous day's low. It has also got a high time frame liquidity pool below, and there is also a strong internal low which can be taken out or liquidated at least. So what is the entry method? There is no entry method. So because there is no, only lid is formed right here. So this is not a valid place to take LC1s. So I'll just rather wait for the LC2A to form, or just wait for the confirmation entry using M50. And so what I said was actually played out, because I told you that since it is just one big push down, there would not be any accumulated, there would not be only inducement, and only buy sell liquidity available within this leg would be above this high. And yes, price actually took out this high. So now, probably price can start to push down, but I'll not get any increase from here. So as expected, so yeah, a price took out the buy sell liquidity above, and for me it's actually chop bullish. So now I need to wait for the price to chop bearish, so that there would be another POI form, wait for the mitigation, and then look for shorts targeting the sell side liquidity. But All this happens if I'm lucky. Suppose if I'm unlucky, price using this buy sell liquidity just rallies down, taking out the sell side liquidity here and the next sell side liquidity here, without even making the pullback. But unfortunately, the price did not push down and make the bearish talk. Price took the buy side liquidity, and it is also called bullish chop according to my market structure rules. But I prefer candle closure, I mean a body closure, just not only wicks, but I also prefer body closure, which gives me a lot of confidence. So nevertheless, this is actually a bullish chop, and this is a probability demand because it has swift liquidity, and price had respected this one and pushed up, came down, pushed up. So with this multiple mitigations, probably this demand could fail, and probably the low resistance liquidity lying below would be taken during the New York lull period, probably. Or if the price still consolidates, then I can expect some buy side liquidity sweep and push down, targeting the 4-hour sell side liquidity tomorrow. But that's totally a different story. For now, I didn't get any trades on both EU as well as GU because today was a bit consolidated day. So yeah, that's it from my side. See you on December 11, 2024, 156. Until then, cheers guys. Bye.